Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, December 13, 2023. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had the FOMC Kabuki Theater situation. We had Jerry's presser. We had a goose operation in the market. Let's get a couple of things out on the table. Let's harken back to above the trend line. She's bullish, period. That's the end of the story. So that holds true. Therefore, traders who are trying to short the tape are fighting the trend. You're the other guy on the don't pass line at the crap table. Were there plenty of traders betting today that the market would fall out of bed after the Fed's comments, after the Fed announcement, after Jerry's comments? Of course there were. That's what started the intraday squeeze operation. They had to cover. Panic begets panic. Buying begets buying. Shorts have to cover. Next scene shows you're up 50, 60 handles, give or take. We don't really care what the Fed said, what they did or didn't do. Nobody was expecting them to do anything. But what did happen is they turned dovish. That translates in market terms to free money. The band is coming back on stage if the Fed is turning dovish and is considering even lowering interest rates next year. Now, whether they do it or not remains a mystery. But if they do it, and traders, investors, people in general think they're going to do it, then guess what? It becomes a self-fulfilling prophecy and markets will inflate anyway, a la new highs today in the Dow. Here's the YM chart, which is the Dow Jones Industrial Futures deal. New highs, new all-time highs. The trend is your friend. They will pull back. From where exactly, we don't know, which brings up another thing. Aren't we familiar with this thing? Markets trade up or down into these tinfoil hat-ish, cycle-ish events. And the answer is yes, they do. Now, we have two things working at the same time. Might want to pay attention. Get out your sticky notes. I've been talking about the culmination of a cycle-type event around the latter part of this week, maybe bleeding into next week. Now, there's something else coming up next week, which is a separate and apart bona fide tinfoil hat event. Thanks for Chad reminding me in the live room today. So what we're going to say is anytime between now and next Thursday, Friday situation, so over the next week, give or take, we should expect markets to A, find the place they're looking for, put in some kind of an interim top at minimum, and have a garden variety pullback that nobody will expect at the time. Time, speaking of which, is more important than price. It's not about price, it's about time. When she's ready and at the right price, but has to be ready, she'll turn. We're on guard, we're on the lookout, we're beginning to do what? We're looking for a top. This is the very early stages where we start looking for signs and signals of a trend change. Doesn't mean it happens tomorrow. It could happen Friday, Monday, next Wednesday, Thursday, anytime in between. Doesn't have to be a catastrophic top. Doesn't have to mean the markets are going to go down for 6 months. Could be for 3 or 4 days. Could be for a week. We're looking for a pullback. We're looking for a turn/pullback operation. Now, many of you will misinterpret this and say, he said it was going to be a top. I didn't say it was going to be a top today. I said we're looking for a top. Time is more important than price. She'll tell you when time is up. Keep your sticky notes out. 472.05 is the next number up in the sequence. Put it on a sticky note. Likely to hit it tomorrow. Unless, of course, you have a rug pull event before the opening bell, but all things being equal, it should be hit sooner than later. Real quick, what's going on inside the numbers? Well, we were waiting on the Fed this morning, so we had the numbers, but the market was very quiet. It was on a grinding operation. What we did have was a pivot, and we knew a couple of things. Below the pivot, she can fall a little bit. Above the pivot, and she can rally a little bit. She actually did both before the Fed, and we basically had the numbers. Pause the video, read the notes, go back to the chart, and double check the work. This morning, all the way down, this seems like a long time ago, 464.70, which is an important price, and essentially is the pivot. 464.70 is our early bull pivot. We think better in pictures, so right of the vertical is today's activity. Here's a 5-minute chart, and you can see what's going on here. This chart's a little skewed because of all this eating time off the clock action, and then post-Fed, it's rally time, pie in the face time, it's party time. By the way, don't forget, everybody send Jerry a Christmas card. 464.70 was the pivot. They hung around there pretty much all morning long. If they're above, we have a target of 466 and change, and then 467.40. But we all know what happens after the Fed. They just blew through everything. This is for the morning session, pre-Fed. Nobody wants to get stuck in a position into the Fed. Unless you're a willing and able participant from a gambling perspective, there's nothing wrong with that. You say, hey, I'm going to take a position. I'm buying calls. I'm buying puts. I know what could happen if I'm wrong. All that stuff. There's nothing wrong with that, but we're treating this as a business. So really, that's on the side. That's for an individual to make an individual decision. We don't do those things. We trade normal markets when it's not kabuki theater type situations, because you bring in too much variable risk to your business of trading. You want to take a side bet? No problem. You could pause the video, read the notes, go back to the chart to double check the work. The market was very quiet. They filled the gap we talked about. The beginning of the gap was a buying opportunity down a little bit. Let me find that here so you can see where it is. 464.16, give or take, down to 463.25. First place of support for a bull-bear battle. And you'll see that again in here. Again, pause the video, read the notes, go back to the chart, and double-check the work. Once more back to the pictures, you could see over here, before the Fed, they came to fill the gap, spiked it by a penny or two, turned around, and that was the end of the thing. Then they just partied on. What about stocks on the move? Well, we had one on the board this morning. Moderna, mRNA, 73.85 was the suggested entry. The numbers work. Haircut at the open, 73.85 was the number. They spiked it once, they spiked it twice, they spiked it 3 times, they tested it 4 times, and they took off into the end of the day. Irregardless, they gave you the trade right here. We had participation in the live room. The numbers work. We've got something for everybody, folks. You want to trade the S&P? Fine. You want to trade options? Fine. Futures? Fine. Exchange-traded products? Fine. You want to be in the live room? You want to trade the IWM, the Qs, stocks on the move, the S&P, anything else you want? We look at it all. We're an equal opportunity analysis department. What's going on over in Camp IWM? Well, they blew through the 190, and that's fine. That was a target. So it's off the board. For those of you in the live room who are asking what's the next target above 190 for the IWM, it's actually slight spike above 194. Almost got there today. We didn't talk about it ahead of time. I didn't think it would happen today, but anything goes on a Fed Kabuki Theater day. But that number is, next number being almost here, a little spike above 194. Now, this is another situation in the live room where we had a live room joint or group/community swing trade in the IWM. Some of us used IWM, RTY, some other vehicles, options, and we were doing it down in here. We were talking about it, and we said, you know what? Here's the deal. You're long from here. They get below this trend line. The trade is wrong. It's a reasonable risk reward. This was the situation. We all got paid handsomely. All we were doing was waiting them for at least to get to the minimum required target, Come hell or high water, they were on a mission to 190. Now they're on a mission to 194. Nice trade. We did the same thing in the live room with TLT, by the way. 83.70, bought it a little higher also, but this was the actual number. Once they got here, it was lock, stock, and barrel forming a bottom, and here we are all the way up at 97 today, give or take. Moves like this in the bond market don't come along very often. It was part of the lazy swing trader from the automated alert perspective. We had a community trade in the live room. I was pounding the table every single day with this thing down at 83.70, give or take. Standing on my head, pounding the table, screaming at the top of my lungs. Here it is. Waited on the number for months. And traded it in between as well. But this was the number, the golden ticket number. And it coincided with all those different interest rates, 2s, 10s, 20s, 30s, whatever, all getting plus or minus 5% on the yield side. It was what they call in the trading parlance, picture perfect. Nobody wanted to buy bonds. Higher for longer. Remember, that's what they were saying at the time. Higher for longer, higher for longer. Bullshit. They're wrong every single time. What about the folks down at the transportation department? Eating time off the clock above all the moving averages. Trend is your friend. And there it is. Here comes the breakup to new prices. Where are they headed? Well, right now they're headed to about 15.8 to 15.9. We'll call it 15,850 or so for argument's sake. We'll leave that up there. See what happens later. That's what's called a target. Like everything else, the Qs are breaking up. They were up $5 today. You could see more clear on the weekly chart. You just squeeze it together. They're up here challenging the top end of what? The old highs. That's it. These are the highs. Are they going to make new highs? Are they not? Will they pull back first and then make new highs? All those things are true and possible. We don't know which one, but the basic bottom line is they're running a test of the former highs. Will they make new highs? Yeah. Will they do it sooner than later? We don't know really. Will they fake everybody out first? Will they make new highs tomorrow, the next day, or whenever? We don't know, but they'll make new highs. Same story with the financials, up 1.5+% today in the XLF. Again, all these markets are getting a little bit far from home base. That doesn't mean they can't go up farther, but it's an awareness. It's one of the reasons why we're now looking for signs of a top. Doesn't mean it comes in the next 24 hours. Looking for signs of a top, expecting it over the next several trading sessions. This is how it begins. It's a process. You're on the lookout. The periscope is up. Smash mouth right in the middle of this range. I think we talked about this last night. It was already up on the board. That was a target range. They got right smack in the middle of the target range. Look at the daily chart. There they are. What else can you say other than they're at new highs? They will eventually pull back and run some tests lower, like the most recent breakout area around 165.5, give or take. They will be back there. The question is, where do they stop first? We don't know the answer, but both things are true. They can go higher, and they will pull back to run a test of that spot. Gold's on a tear, didn't get to my number. I was looking for 1980 down to 1950. They took off like a bat out of hell by coming up some few bucks short. I think about $7 short on gold futures. It's all right. One of the long swing trades is in one of the gold stocks. It's fine. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.